Hey, what's going on guys? Dante Trades here, and in this video I'm going to teach you how to pass 150k TPT accounts easily, or any TPT account for that matter. So I'm going to go over my results for my 150k, and we're going to talk about pro strategies and show you the exact trades and setups I use to pass, so you can do this exact same thing to get funded consistently with Take Profit Trader. And I'm also going to talk about how to pass rhythm, tips, tricks, and etc. I'm a six-figure trader. If you want a 100% free futures trading course, the link to that will be in the description. And if you want to check out the premium course, the link to that will be in the description as well. And I'm going to discontinue the free course this week, so get it while you can. Now, before we get into this, if you're going to be trading with TPT, you can get the best discounts using the code Dante Trades. So the normal price for a 50k is $170 per month. But if you use my code Dante Trades, it would take it from $170 per month to only $102 per month with that discount. Also, as well, you will get an activation fee waived with Take Profit Trader, which will normally cost you $130. So massive discounts there. You can use the link in the description and use the code Dante Trades to save yourself massively with Take Profit Trader. And it also helps the channel when you use that code. So it's a win-win for both of us there. Now let's actually go into my results here. So let's just jump right into the results. Now, as you can see here, I'm on the Take Profit Trader website here. You can see my profit target reached 9K. 36% consistency rule. So I was going for about $3,000 per trade there. And you can see one thing about this account is I actually got this account on December 25th, but I didn't actually start trading this account until really December or January 16th, sorry. So I passed this account in just a little bit under 7 days. So in exactly actually less than a week. So exactly 5 trading days. If you look into like my profit factor, it was exceptionally good at this time. So you can see 9.3K, 85% win rate. Actually on this funded account, I had a 100% win rate. But this is my trading during that time. And if you actually look at here, we just had that nice and steady equity curve all the way to the top. Now let's actually break down into exactly what am I looking for, my mindset, and how I'm achieving this. Now, the first thing you may notice is I'm going for aggressive to pass. I'm usually trying to pass in 3 trades, as you will see there. 3 trades is the most efficient and best way I found. I usually try to pass in 2 trades, but that's too aggressive because if you're trying to pass in 2 trades, that means you need to risk 50%. So say, for example, on a 150k account, if your target is going to be 9k, then you have to risk 4,500 on your first trade to risk 50%. And if you lose that first trade, you basically lose the entire account. So I found that to be like way too aggressive. So for me, I found this is a terrible drawing, but for me, I found just risking 1/3. So if you do lose that first trade, you can still actually recover from losing that first trade. And so for me as well, I found that it's extremely better to be aggressive when it comes to passing these prop firm accounts than sit in and trying to pass a prop firm account for like months, weeks, or months at a time. I just found it's much better to be aggressive. I mean, most of the people that I know that are winning with prop firms, they kind of have a similar strategy, right? After you take your 3 trades, your 3 winning big trades, if you see no setups, I just trade 1 micro and open and close it within 30 seconds to a minute, so it counts as a trading day. Now let me actually break this strategy down to you. Now I'm going to get into the actual trades and setups, etc., but you just need to know about like the mindset and the rhythm that I'm actually looking for, and then we'll go specifically into the strategies and trade setups, etc. So you can see here, I'm again back on the example 150k that I told you guys about as well. So on this day, you can see the first trade that I took, that was roughly a $3,000 trade because I'm trying to pass within 3 trades. So all 3 of these trades are roughly about $3,000. And you can see here, I made $3,000 here. And then the next day I only made $3 or lost $3. Now, why did I lose $3? The only reason I did that was because that day, either I wasn't feeling it or I didn't see any setups that I thought were worthy. So I just opened and closed a 1 micro trade. So it counts towards my traded days, because with Take Profit Trader, you do have to trade 5 days. And you can see I did the same exact thing here. I made $3,000, and the next day I just opened and closed a 1 micro trade. And again, just so it counts for the trading days, because Take Profit Trader does have that minimum requirement of 5 trading days. So on those days where I don't see a setup or I just don't feel like trading for that day, I will open and close 1 micro. And then you can see obviously here we hit the profit target. So that is how we kind of breaking that down here. And I like to trade 1-to-1 risk to reward, and I'm looking for mostly A trades, but sometimes I would take B plus trades as well, because my B plus trades actually have a really high win rate as well. For me, I just find the high win rate strategy 1-to-1 to be really good for me. That's how I achieve, you know, the 85% win rate that you saw. To be quite honest, I don't normally have have an 85% win rate. Usually my win rate sits around anywhere from 70 to 75% normally, but last week we had a really good week, so and it really works for me, and it's much easier to be profitable with a 1-to-1 risk to reward ratio for me personally, right? So what is my strategy and how did I pass? So I trade volume profile and order flow. So volume profile and book map or volume dots, and I'll break down to you guys what that means here in this video. So what is volume profile? So volume profile is a tool that shows you exactly where the most trading is happening in the market. So this lets you see the true volume and liquidity behind the markets. This is used by professional traders and big institutions to spot the best price levels. So why this is a game changer? So it's a game changer because it shows you in real time market interest with no delays and no guessing. Most indicators are lagging, but not the volume profile. And this finds true support and resistance and liquidity in the markets based on actual trades and liquidity, not just some random lines on the charts. And this pinpoints where institutional investors are putting money to work in real time. So this is just extremely accurate, and it gives you high probability trade setups by following where the big players are active and responding to that appropriately. So the key parts of the volume profile is we have the point of control. So this is where the most traded price volume happens and the most big players are active. So if you look here, this purple line here on the map here, so this is the volume profile. So this thing that we have drawn across here, this is the volume profile here. So all these green kind of nodes here, and then we have this purple line here in the middle of that is called the point of control. That is just where you see the most activity, the most buying and selling. So then you have the value area high. So the value area high is this green line here, and generally speaking, when I get to the value area high, I'm looking for shorts, and we'll come into that in a second here. And then the next one we have is the value area low. So it's the exact opposite of the value area high, and it's this red line here. And generally speaking, when the price gets to the value area low, I am looking for longs, right? We also have something called high volume nodes, and this is another price point where big volume has to step in and lots of liquidity, and we'll break that down and talk about that here. So to explain this, I like to use something called the onion market analogy, and this will make it like a lot more clear for you guys what this means. So imagine a market for onions. So let's just say you walk into the supermarket, right? You go into H-E-B, Walmart, whatever is near you, and at the point of control, this is the normal price of an onion. Let's just say for this example, it's going to be $1. This is where most of the customers are willing to buy an onion, and this is where most of the supermarkets are willing to sell an onion, right? So this is the point of control, and you can see here lots of transactions here happening at this purple line at the point of control, right? So this is just the normal price where a lot of buying and selling is happening. So again, most transactions occur here. Both buyers and sellers are the most active here. Now, when you get away from $1, below $1, sellers lose interest. So let's say, for example, this red line here, this is the value area low, and let's just say the price here is $1, and then when you get to the value area low, this will represent like a 10-cent onion, and this down here represents like a 1-cent onion. Now, the reason why the price tends to spring up from the value area low is because very few retailers or grocery stores are going to be willing to sell their onions for the price of only 10 cents or 1 cent or whatever have you. So the price has to go back up to where grocery stores are basically willing to sell their onions or their merchandise until, you know, transactions can happen again, right? And then if you have the opposite happen, right? If you walk into a grocery store and let's just say up here, this represents like a $20 or $50 onion. Very few people at the value area high are going to be interested in paying $20 or $1 for an onion. So what happens? The price has to come back down where? To a reasonable price around $1 to $1 or around $1, so that both buyers and sellers are going to be basically interested in transacting there. So this is just a really general and basic way of how we look at this, right? So key volume profile concepts. Another thing that you want to pay attention to is going to be high volume nodes. So if you actually look on the volume profile here, you can kind of see this here, this kind of like high volume shelf. We would consider this a high volume node where you see like the points are really sticking out here. These are like high volume nodes here. These are high volume nodes, but this is like a really big high volume node. This is just where we see lots of liquidity built up in these general areas, right? We really want to pay attention to high volume nodes. Again, these are other large volume areas, and when you get price breaks from a high volume node and it comes back to retest a high volume node, you generally get very strong reactions from high volume nodes. So I like to use them as shields for my stops. I'm not going to get too much into that in this video, but yeah, so just we have to always pay attention to the high volume nodes and how they are going to be either protecting our trades or working against us, right? So I'm going to show you an example of like, this was an example of an exact trade that I took to pass my account. So what I'm looking for is A+ trades. So for me, An A plus trade is any trade that has 3 or more confluences that kind of supports the same trade idea or price direction, that being up or down. So in this case, what am I looking at here? So you can see here, I drew this box here because we had a high volume node here, right? So I drew this box because it was a high volume node here, what I just told you guys about. Also as well, we have the current session value area low, and we have a high volume node right on top of that. We have the previous day's value area high, and it's exactly what I just broke down to you guys here. So you can see the current session value area high is this green line here, but this green line here is exactly the same thing as this one, but just for the previous day. So you just look at the entire previous day's data and where it traded, and then you can see the range of where the value area was for the previous day. So I marked that out there. So that was the previous day value area high, and the last week low was also right here, right? So we have 4 different levels. So for me, there was 4 different levels that was supporting this trade to the upside, because we have what? We have the current session point of control here, which again, I don't like to trade this by itself because it can be choppy, but along with the current session point of control, we have the current session value area low. And as I told you guys, we like to look for longs at the value area low. And then we had a nice big volume node, a clear volume node shelf coming out right there at that level. And then also we had the previous day value area high and the last week low. So we had 4 different levels here. We had the previous day value area high, and we had the last week low. So for me to lose this trade, I had to break through 4 to 5 different critical levels, depending on how you look at it, to actually lose this trade, right? Also, one other thing I want to show you guys in context is if you look at these dots here, these are going to be showing aggressive buyers or aggressive sellers. So if you trade the book map, you know about this. The bigger the dot, the more aggressive the buy or sell is. So what happened here was, you can see here that we came down to this level. And to put this more into context as well, this level here, this last week low, this was acting as a strong level of liquidity all this week. So I was really watching this last week low level. And then we had all these different levels stacked up on top of this. And then on top of that, we had aggressive buying coming in right at that level, and we consolidated here for a while, and we didn't see any aggressive sellers coming out here, right? So once I saw that, that we came down to this level, we had to break through those 4 levels, those 4 critical liquidity levels that I was actually watching to actually lose. We had aggressive buyers at that level with no aggressive sellers coming out. This was a super duper like A plus trade for me. And let's actually look in the charts and see what happened there. So if you look in the charts here, this is actually what I saw in the trade. So I entered this trade right around here, and this was to close out my account. So I entered, I believe either it was on this candle or this candle, but you guys can see here again, we just kind of consolidated here. Again, we had that aggressive buy come in at this critical level of liquidity, this whole range, and I was trading at 1-to-1 risk to reward ratio. And you guys can see here, we just came down, kind of consolidated, and we just pushed up all the way back up to the upside. Now, in this case, I didn't hold on to this trade because obviously I was just trying to pass my account. But you can see there, reading the volume profile, reading the liquidity, and being aware of these things, I'm able to get some really amazing trades and really good trade setups. So this is exactly the kind of stuff that I'm looking for when passing my accounts, and just trading in general, how I achieve like a high win rate using 1-to-1 risk to reward ratios. And for me, this is the very easiest and best way that I have found to trade. Now, if you found something in this video a little bit confusing or you weren't clear, you can actually click the link below to get a free course, or you can join the premium community, because honestly, the free course just hasn't really been worth my time so far. So I'm most likely going to close it out this week. But if you enjoyed that video, drop a like, subscribe. If you have any questions, let me know in the comments.